Okay, there are many questions regarding the calculation of NCI. Why there is any adjustment in subsidiaries profit and henceforth, why is it affecting NCI, non-controlling interest? Okay, I'll tell you the reason. Whenever we prepare working note related to consolidated retained earnings, there's a format that we follow. There is a parent column, subsidiary column, maybe subsidiary 1, 2, 3, maybe if there is any associate, this is how we go ahead. Okay, we'll start what is the profit as per draft. Okay, as per balance sheet. So as per draft FS, as per draft financial statements, whatever the retained earnings are, we'll go with the same closing retained earnings generally. You'll remove unrealized, you'll remove pre-acquisition profits first. Pre-acquisition profits. Any retained earning related to the pre-period will be removed because we only work with the post-period. Why? Because during post-period, parent has control over subsidiary. So parent is entitled for the share of profit only related to the post-period. Okay. Then henceforth, if there is any adjustment, okay, let's talk about it. Let's say unrealized profit. One party says it's a profit for me, another party says it's a cost for me. As a group, it is not any income or expense, and therefore we eliminate the unrealized profit whenever there is intra-group transaction. If parent is the seller, you will remove unrealized profit from parents column. If subsidiary is the seller, then you will be removing unrealized profit from subsidiaries retained earning. You have to remove unrealized profit from sellers column. Whoever is seller, okay, in the transaction, you will be removing unrealized profit from sellers column. Then there is example unwinding of discount. If there is any deferred consideration promised, maybe any deferred provision made, okay, provision for decommissioning liability, environmental provision, etc. So unwinding of discount, that is charging interest on that liability. So unwinding of discount, this is interest expenses increasing, that means profit will decrease, will decrease from parents column. Any other amount, let's say any fair value adjustment, any excess depreciation, okay, on the fair value adjustment. There can be multiple more items, okay. The important thing is that whenever you get the final amount, this is known as post acquisition profits. Post acquisition profits earned by the subsidiary, okay, earned by the subsidiary. Now interestingly, this is attributed to, this is further attributed to parent and NCI with their respective percentage of holding. With their, I hope the working note is clearly visible. Okay, parent at the rate their percentage of holding, NCI at the rate their percentage of holding. Let's say parent holds 75% and this is, let's say, 10,000. So 10,000 into 75% will be added to parents column, and 10,000 into 25% will be added to NCI. Okay, any item that affects subsidiaries post profit, will affect NCI calculation. This is the basic idea. Therefore, whenever you calculate NCI, so NCI, non-controlling interest on acquisition date, okay, you will start with the same. Then you will add post acquisition profit multiplied by NCI percentage. Let's say in this case 25%, you will add the same. If it's loss, similarly the loss will be deducted, and if there is any other adjustment, that will be taken care, and then the amount that you get is known as NCI on reporting date, the date on which you're preparing your financial statements. Okay, very important. Any item that affects subsidiaries column like unrealized profit and excess depreciation, etc., the same will affect NCI. Okay, I hope this is clear. This makes a lot of sense when you're practicing your questions. Okay, I hope this helps you. In case if you have any other topic that is troubling you, then please mention in the comment box. I'll make a video on the same as soon as possible. Thank you so much for watching. This is Swati Gupta, Chartered Accountant.